So basically what this does is we take the assets and liabilities from a balance sheet, put them into a document and look and see as transactions happen how the assets and liabilities change, but they'll always change by the same amount so that our balance sheet still balances. So to start, we write down the name of all the assets. So we've got buildings, we've got motor vehicles, we've got stock, we've got debtors, cash, creditors now, amounts falling due in less than a year. We've got trade creditors, and these are liabilities. Rates due. So bill that we owe. Bank overdraft. Now bank overdraft means we owe money to the bank. I usually put it in as an asset but a minus in the assets. It makes it easier to do the maths, I find. So I'm going to put bank in here as a minus number, so it's minus 21. And then finally we've got the last one we have is we'll have capital. And if this was a company, then we'd also have a retained profit position, okay, a retained profit, so a profit and loss account. So anything that is to do with expenses or incomes, that's profit and loss. So if we have more income, okay, that will go in there. So we'll see this as we go through the question. So I'll put the numbers in. So buildings is 430, 50 for motor vehicles. Stock is 30, debtors is 40, cash is 12, and we have the minus for bank. Creditors is 50, rates due is 1000, bank overdraft we've dealt with already, and capital is 490. And there's no mention of a profit and loss balance, so that's 0. So what we're going to do now is we're going to add up all of the assets. We get a total figure, and we'll add up all the liabilities and get a total figure. And this we should end up with the same number, and we do in this case. So our balance sheet balances. Now, when we do each of the transactions, we'll be adding up the result of the transactions and see does it still maintain this balance, because the assets and liabilities must be the same at the end of the question. So the first one, we paid creditors by check 3,000 and received a discount of 100. So we paid creditors by check 3,000, so we spent 3,000, so that means we'll have a minus 3,000 from our bank, okay, and our creditors, we owe them 3,000 less, but we also got a discount of 100. So we actually owe our creditors 3,100 less than we did before. And the discount, well, that would be an income. So that goes in profit and loss. So that would have been in my profit and loss account. So I'll put that in there, and it's 100. We have an income of 100. So now, what we did before was we added up all of our assets and liabilities, and we made sure that the two numbers are the same. So when I add up all of the changes to my assets and liabilities as a result of that transaction, I have 3,000 less assets, and if I add up the liabilities, I'll end up with the same number. Now, one sec. I'm just getting this so that it'll do the maths for me. So I have 3,000 less liabilities and I have 3,000 less assets, so my balance sheet still balances. The next one, I sold a motor vehicle for 8,000 cash. So there's no mention of depreciation here, so I'm presuming that the motor vehicle originally was worth 8,000. So I'm going to take away 8,000 from motor vehicles, and I got some cash of 8,000. So that's a plus in cash. So I have 0 change, so I have no change to my profit and loss. Sorry, to my assets or to my liabilities. So the net effect on the asset liabilities is both 0, so that means my balance sheet will still balance. I received 500 cash from a debtor and full settlement of a debt of 550. So the debt was 550. So I'm going to cancel that. I'll take 550 away. So that cancels the debt. and I receive 500 cash, so I'll have 500 plus going into cash. And the difference between the two of them is if we got 500 to settle a debt of 550, means we gave a discount. So that's discount allowed, which is an expense. So that'll be a minus in our profit and loss. So we end up with the same effect on the assets and liabilities with 50 minus in assets and liabilities. I sold goods and credit for 4,000. So that means that so when I sold goods, right, it means that I have sales, okay? So that means I have, what's the amount of money? The amount sold goods for 4,000. So I'll have 4,000 more income. My debtors owe me 4,000. Okay. Now my stock goes down by 4,000. So that's if we knew what it would cost, but we're not told what these goods cost. So just all we'll do for this one is we're just going to show that we are owed more money and we have an income from sales. Next one, we bought goods and credit for 5 grand. Okay, so that means creditors. So we'll have 5 grand more in creditors. And profit and loss is going to be, we have more expense, okay, more purchases, 5,000. Okay. And then the last one, we paid rates due by check. So there was a rates due of €1,000 liability. We've paid that, okay? So we don't owe that anymore. So I'm going to cancel that debt. So that 1,000 liability is gone. And we've spent money. So we're going to take that money because we paid by check. So it came out of the bank. So minus 1,000 from bank. So we end up with a net effect of 1,000. So the last thing that we're asked to do in the question, so we're asked to record in a tabular statement the effect of the transaction. We've just done that, and ascertain the total level of assets and liabilities at the end of February. So basically what we do is we add along. So we add everything. So I'll get Excel to do this for me. So we add everything from the opening situation right up to the closing situation. Now with buildings, there's no change in buildings, but everything else, there will be changes in a lot of the other assets. And we do the same thing here. And the liabilities have also changed. And at the end, when we're finished the question, we should end up with the same amount of assets and liabilities. So this is the amount of assets and liabilities, and the two numbers are the same, which means our balance sheet still balances. That's how you do that.